Hello and welcome to the Perpetual Pip. This is your host, Will Gomez, and it's time to get started with our tutorial section. The purpose of these tutorials is to help you get used to the practice of being a trader, and we're going to go through various practical examples to help you to be able to recognize the necessary things that you need to be able to effectively trade in the different markets. These videos are going to be structured in a very short, easy to digest format. But of course, if you have any questions, comments, concerns, feedback, feel free to let us know either via the site or you can email me directly at any time, will@perpetualpip.com or perpetualpip@gmail.com. The first lesson that we're going to be hosting is on what is the forex. This market is among the most volatile in the world, offering the most opportunity. Let's explore just how much. Simply put, the foreign exchange or the currency market is an exchange comprised of over 4,000 world banks. So essentially, every country, if you're familiar with the central banking system, every country has their own central bank. And because the world is effectively a giant marketplace, these countries are trying to conduct business with each other. So in order to be able to do that, they have to be able to trade funds. You can't just show up somewhere else, right, with a pocket full of your local currency. You have to be able to pay them for the goods or services that you're trying to achieve or receive, I should say, with local currency that they can spend. So in addition to these world banks that are a part of the forex, they are a major part of the forex. You have thousands of large trading institutions and private speculative traders like ourselves that are also looking to conduct business on here or take advantage of the change in price over time. The way that they do this is by buying and selling currencies from around the world. So essentially, like I mentioned before, the function is to facilitate trade and commerce around the world. Now, as far as how about me? Can I also take a part of this? Well, absolutely, definitely. The rest of the world currencies, right, or the rest of the world markets, I should say, whenever you think about trading, whenever you think about exchange, a lot of traders or traders to be think of the stock market. They think of options. They think of commodities, and they think of new things on the market like Bitcoin. Well, Bitcoin, guess what? Is just another currency. It's a cryptocurrency, but a currency nonetheless. So if we're talking about the way that the forex market moves in comparison to the rest of the world markets or the other exchanges, as it turns out, here on this graph, you can clearly see the New York Stock Exchange on average exchanges on a daily basis in trade $22.4 billion on a daily basis. The Tokyo market not too far behind at 18.9, and the London Stock Exchange at 7.2 billion. You can see here how the forex market, the volume exchanged on a daily basis, is absolutely dwarfing these other exchanges. $5 trillion at last check. 2016 was the most recent check that I found. At least $5 trillion on a daily basis changed hands in the forex market. So it is the most volatile market in the world. And naturally, more volume, more people trading it equals more opportunity for you and I. Unlike the rest of these markets as well, these other markets, the New York Stock Exchange, Tokyo Stock Exchange, London Stock Exchange, they're only open during their individual hours. And once they're closed, that's it. You can't trade those stocks anymore. With the Forex, it's a 24-hour, 5.5-day market. It's open from Sunday afternoon all the way to Friday afternoon. And since these different sessions, there are 3 different sessions. You have the London, New York, and Tokyo session for the Forex as well, but these overlap each other. And because they overlap each other, it allows you to be able to trade any currency pair that you like without reserve in the Forex at your leisure, no matter where you are. In addition to that, every single one of these other stock exchanges, you're talking about tiny pieces of ownership of companies. So since you're talking about tiny pieces of ownership in companies, and there's so many companies worldwide, even narrowly speaking, if you're just talking about the New York Stock Exchange, you're just talking about US companies, then you can only imagine how many different companies there are in the United States of America. So you're talking about a very, very broad spectrum of tradable options. When it comes to the Forex, there are only so many countries, only so many currencies and pairs that can be created as a result. The majors, there are about 28 currency pairs total that most traders will trade, and the majors narrows it down to about 7 to 12 pairs. If you're just talking about the US crosses, now we're down to just 7. Right? Now, naturally, traders tend to broaden out and look at different things of their interest, but the Forex narrows down your scope of trading so that you know what you're going to trade, how it's been behaving relatively quickly, as opposed to trying to make a very wide decision when it comes to your stock portfolio. This has been a quick overview as far as what the Forex actually is, the marketplace where traders trade cash, and people are always going to need cash. Plenty of opportunity for you. If you have any questions on this, again, please feel free to email me directly, will@perpetualpip.com or perpetualpip@gmail.com. And if you want to go ahead and see live market application of these techniques or these lessons that we're going to be talking about here as the series progresses, feel free to join up, sign on to perpetualpip.com. These tutorials will be available free of charge for anyone that's interested in learning about the markets. And the only thing that you'll be signing on for on a membership basis, if you like, is for the live sessions. I look forward to seeing you there. Take care. This has been Will Gomez.